So it appears that the Restream is not picking up my audio. Not sure why. There was a lot of changes for the New Year's Eve party, and it seems like something got changed. I don't know about you guys on Zoom, if you can hear me. Okay, now you guys can hear. Yay, something changed. Well, thanks, Tony. I'm glad it's fixed. I don't know what I did, but so what we've been looking at is just trying to ask a question. Have we moved too far, too fast away from that 10? And the 10 that we were looking at is the week and the day. So we can visually see how far away the ES tends to get from the 10 before we see that reversal. And last week, in that pause that we had, that pause gave the market, that 10, time to get caught up with us. And here we are again this morning. We're bullish. Things are on the move, even with all of that negative news out there. And you got to remember, Mondays are like absorption day. They call it price discovery. There is this economic theory that suggests markets are never wrong, that everything you would ever need to know about something is priced into the market itself. It doesn't really matter if you agree or disagree with that theory. It's certainly not my theory. I didn't create it, but there is that theory, right? Well, over the weekend when the market's not open, all of this news is taking place, and on Mondays it has to price in all of that news. And even though a lot of the news in the weekend seemed very negative, we're still moving up this morning. So we're not too far away from the 10. We've established that. We can still see a lot of bullish activity. I'm not saying we are going to see it, just that in the grand scheme of things, we have not gone too far, too fast, right? That's really all we were trying to answer there. Have we gone too far, too fast? So the negative news over the weekend is the amount of this COVID variant that's spreading. We're seeing numbers like we've never seen before, but the deaths are really low, right? So apparently this new virus strain, is running like wildfire. It's not as deadly, but it still has a lot of impact. There's been some big name companies and a lot of banks like Goldman and JP Morgan who are talking about a lack of workforce. Gratefully, people aren't dying, but they're not going to work either, right? They're using sick days, they're not showing up. There's a lack of production. And yet we're still seeing this bullish move in the market this morning. Tesla had some delivery numbers that we may get to as well, but for the most part, we came up off of those lows. We're still inside the box. We're back above the 200 period moving average. We're back above all of the moving averages, right? 10, 20, 50, 200, and we're above all of them. Now, the 50 is still underneath the 200, but we've got a really nice ribbon stack, right? And we broke through to a new Globex high. We've got some structure underneath this for a Busby. There's a video on Busby on YouTube, Bullish Bears. All you got to do is just search YouTube for Bullish Bears Busby. You'll see it. So there's a nice little Busby play there. And I'm on a 30-minute. 30-minute is a pretty comfortable time frame when I'm using these higher moving averages, just from a day trader's perspective, right? But we're still in that range. Get a little bit of perspective with the volume profile. In blue, we've got time by price. In green, we've got volume by price. And you can see in this range that we've been sitting in, we have aggregated a lot of volume. It's where our point of control is, and we've spent a lot of time there. Not much of a surprise, right? We didn't really need to turn on these indicators to see that we've spent a lot of time and we've had a lot of volume. But if we break through this low and maybe even back on this previous low at around 47.70, we've got a very large shallow area, and we will move through that area very, very quickly, right? So at least we get that kind of context. If this begins to turn negative, it could get negative very quick because there's no volume structure, no volume nodes underneath us to provide that support, right? And that's what these shallow areas are giving us. So at least we got a little bit of context from that. We have a smaller weekly expected move this week that's worth keeping an eye on. We get the expected move from here. You can do it two different ways. You can use the right now real expected move, or you could use the dynamic, a static expected move by using the indicator weekly expected move. Now, that's not a default Thinkorswim indicator. You'll have to get that from the Discord site that I created. It's full of Thinkorswim Discord indicators. All right. So if you are a member of the Bullish Bears on our Discord, then just go down to charts and studies in the traders resource zone, custom charts, custom scripts, kind of scroll up. The Thinkorswim Discord, Thinkorswim workbook, it's got like 1,500 or 1,800 indicators, charts, scans, studies, lots of stuff, right? That weekly expected move is in there. It is a static one, meaning it doesn't move. The dynamic one would be using the options tab. These lines are set on Friday and they're not going to move again, right? That's why they are static. So that's our expected move for the week. That was our expected move last week. So you can see it's bigger this week on the ES. I think on the SPX it's smaller. Or maybe I was on the Nasdaq when I seen that it was smaller. Doesn't matter. For the day, if the Econ does bring us back to bullish, we will be really focused on this topping zone here. There's a lot of liquidity up there. It's important to understand visually what I'm talking about. Thinkorswim integrated with Bookmap. It's something you have to ask for. So if you're looking at your Thinkorswim and you're looking at this and you say, I don't have that. Well, you have to ask for it. Now I'm on the free one. You can see I'm not logged into anything, but even not being logged in, I can still go to the ES. If you do want to turn that on, you have to go to support and tell them that you want to activate the Bookmap, and just tell them you want the free version so that they don't bill you. Use it for free, and then if you like it, then start paying for it, right? Don't just run out and buy it, because I can tell you it took me over a year. I use Jigsaw normally, and it took over a year for me to integrate order flow and like this into my trading style. Back when I got Jigsaw, Bookmap wasn't integrated into the Thinkorswim. So the visual that I was talking about, that liquidity, are these white bars. They are over our head. That is orders on the books. Right? Just kind of zoom out here. It's resting orders. Now, those resting orders can be moved. It could be spoofing. I'm not saying that they're written in stone or that, that what we see now won't change, but that's where the liquidity is at right now. And we don't even have to guess or assume. We can see that visually right there. So if we were to rally up to that round number, 4,800, there are a lot of orders resting there. We will need enough buyers to absorb that, right? That's the liquidity that I'm talking about. And there is liquidity over our head. We'll just move that bar up a little bit more. And it makes sense that it's not spot on perfect, right? Because that's the highest point right there. And markets aggregate, right? They don't go from pivot to pivot. They expand just a little bit more every time, right? Because people are moving their new entries a little bit farther every time. And it just gets a little bit bigger and a little bit bigger until finally chaos, right? And it breaks out, makes the move. So it makes sense that the orders that we're seeing are right around the highest point and even just a little higher than that, as opposed to trying to mark a line or a level where the most orders have been marked just a little bit beyond that. And again, we don't have to assume. I'm not guessing. I can see it. It's right there. 688 contracts are sitting up there. That's the liquidity. As we move up, we fill sell orders, right? Keep that in mind when you are day trading. We fill sell orders on the way up. We fill buy orders on the way down. That always throws new traders off. Obviously, we're filling both sides, right? You can't have just one side. You need a buyer and you need a seller. But it's the aggression. Who's reaching? Buyers are reaching up, finding someone willing to sell, and then they buy it. Well, they have to reach higher to do that. So they are filling sell orders. They're reaching up. So if we get bullish today, that's going to be the target. If the economic news gets a little rowdy, we're going to be aiming for this downside down here. And I say that I'm really surprised this morning with all of the negative stuff that is going on out there that we were getting this nice move in the market. I actually woke up a little early and I was in here recording an options video when suddenly the market just broke off of that low and ran like a mad demon, right in the middle of a stream. I couldn't trade it, so I didn't get any of it. I hope somebody did. The new content that I'm talking about that I was recording this morning is for the new Discord. Our next level library is moving to Discord. Yes, finally. So that we don't have to go to the Bullish Bears website, log in, and go to next level. We can just go to the next level Discord. I'm so excited about that. I can't wait. It's not that I'm against the website. I love the website, but I like to just keep everything aggregated right on the Discord. I don't have to go to a different place and log in somewhere else. Okay, so we've got our range. We got our high, we got our low. It's not expected that we're going to break beyond these levels. And even a negative day at this point would begin below this, right? A negative day in the ES would start somewhere down here. If we don't go down there, it's not going to be considered negative by the end of the day. They will talk it up. It'll be positive. You'll hear them on NBC and Bloomberg about, yeah, the futures were up today and everybody's happy. If it doesn't get down here, and heck, I mean, even just a 0.25% negative, it would still be considered okay. Maybe not bullish, but it wouldn't be bearish. It wouldn't be negative. So keep that in mind today. And there was a lot of negative news this morning. So I'm honestly just really surprised that we're seeing these bullish moves. Same thing in the Nasdaq. Right on iron. I like it. It sounds good. One of our members in the Discord said there's Discord IPO is coming in 2022. That would be pretty phenomenal. I would love it. Microsoft tried to buy Discord and they offered a lot of money. Discord said no. I think they were going to use it to make Teams better. I'm not arguing that you're wrong or that you're misinformed. I don't doubt you at all. Not even a tiny bit. For those not able to read what he's saying, he said that if you want to learn more about it, Bloomberg announced it last week, and that you could go to Bloomberg to be able to read more about it, or on Reddit. They also talked about the Discord IPO, and that you could go there for more information as well. All right, so looking at the Nasdaq, it's not as positive, right? We're underneath the 200 still, but we are back above that 50, and we are back above the 20. We're still inside day. We are inside yesterday's price action. So at this point, we've got our Busby. That is a very beautiful Busby, by the way. That's a 30-minute Busby. Absolutely love it. First retest after breakout is Busby. It's just a short description of what it stands for. So we set a high, we pulled back, we tested against that high, pulled back again, finally broke out, and now we're testing against the old resistance and validating it as a new support. And we're looking for a run to the upside. A Busby only owes you back to the top, but on a 30-minute, the top is a long ways off, right? There's plenty of room there to get a nice RR. So that's just an absolutely sexy pattern right there. I haven't seen one that good in a while on the NASDAQ, especially a 30-minute. You can still see the general slope. And if we were to turn on the regression drawing line, just start at the high and move your mouse across. You don't actually have to move your mouse to the top. You can just start on Tuesday, anywhere on Tuesday and anywhere on the chart. The line will be drawn in the appropriate spot. This is the line that was just drawn. We'll just make it really big and make it stand out. You can see that linear regression line and the sine wave, peak to trough, all the way. Markets don't move in a straight line, right? It makes perfect sense. So that was the sine wave all the way down. And we're still getting lower highs, lower lows, just working it down. What we want to see is that conversion, that flip back in the other direction. We have one higher low here, right? We got two higher highs. Well, I mean, other than that, wick, right? So you got to try to put the two pieces together. We're still inside day. We're starting to form a bottoming pattern. We're seeing a little bit of a reversals form, but we're still inside this structure, right? And that's a very beautiful Busby, but there's still more structure here that we need to resolve. So as long as the NASDAQ is still underneath that 200 period moving average, I'm going to be looking for us to stay in this choppy sideways range, right? This kind of price where we're getting these big spikes, long wicks, reversals, all of this kind of price, all of this kind of junk. As long as we're underneath that 200 and we're still inside of this range from the last 2 days, that's the kind of price that I'm going to be expecting. So if you're looking for some really good, clean price action, you may find that a little difficult. I'm certainly not saying that you shouldn't trade it. Trade it more like you would trade stocks and options, right? Use a smaller product, go to, the MNQ and give it a little bit of space. I've seen people really trying to use those micros as if, that you can keep your risk down to like 2 points. It's a micro. You don't need a 2-point stop in a micro, right? You wouldn't do that with Apple. Try to trade, like a fraction of a share of Apple and then use a really tight stop. It doesn't make any sense. Back away, give it a little bit of room, and trade, a pattern, a setup, a moving average bounce. Trade something rather than just trying to negotiate what the next candle's going to do, because nobody knows what the next candle's going to do, right? It all comes down to order flow. Remember that book map? The Discord link is for people that are in the bullish bears and actual members of the bullish bears. So the easiest way to get there would be to go to the bullish bears website. And once you're on the bullish bears website, sign up for, a free trial. It's free, doesn't cost you anything. So here, when I go to get started, it talks about entering our trade rooms. That's going to have you come over to the Discord, because that's where we live stream in the mornings, and where I live stream in the afternoons, trading live, putting on trades, building trades. So you hit enter our Discord. It's going to, if I hit it again, take me over to the Discord, to the Bullish Bears Discord. Once you're on our Discord, come down to the Traders Resource Zone, Custom Scripts, Thinkorswim Workbook. So looking at the move that we had in the overnight hours, you can see that massive gap up from where we closed to where we opened in Globex, and then the rally beyond that. Beautiful 15-minute Busby on the ES and the Nasdaq. We had the same gap here in the Nasdaq. We closed here on Friday, opened here on Sunday. We kept the gap. So this is an unresolved gap. Just keep that in mind. We may revisit that later in the week. You can see that the VIX futures have continued to fade off. The dollar tried to rally up a little bit, and right now it's just sitting inside of its own price action. Not only is it sitting inside of yesterday's range, it's sitting inside of its Globex range. It's on the lower end of that. Same thing with the bonds. Now the dollar opens at 8 and the bonds open at 8.20. They are an early warning or an early precursor to the kind of day that we're going to have. And what we really don't want to see in here are exaggerated moves, right? We don't want to see this thing getting rowdy. When the dollar moves, we can't just talk about like a strong dollar, right? It's so much more than that. Why is it moving? Is it a reflection of global risk? And to be able to answer that question, we usually just look at the dollar and then we look at the VIX. If they're moving in sync, then the dollar is moving in a form of global risk. When it's not, then it has no connection to this. And we want to dig deeper into the why of the dollar moving. When Turkey was getting rowdy with the lira, we were seeing people run over into the dollar, right? It's not always something that has to be directly connected to um, something positive or a negative. We just want to get the why behind it. For the bonds, it's the same thing. There is a lot of research connected to um, the bonds versus the indexes in like the ES and the NASDAQ. And the way that we usually hear that phrased is, quote, stocks versus bonds. All right. So they'll talk about, the ES and the NASDAQ in a vague way, referring to, quote, stock versus bonds. Tasty Trades or Tasty Works did a number of research topics on this, a 20-year history of when the bonds move, the 30-year bond, and when stocks are moving and when they move together. They do actually move together in the same way. And then when they move opposite of each other, they don't always move opposite of each other, right? That's important to recognize. Well, there's a little bit of the fade coming in after that rally up. Not a surprise, right? When a market moves really quick like this, it tends to mean revert a little bit. So we want to see if it's going to find that support or not. That's the very reason that Busby's even exist. We had a really nice breakout. Now we're pulling back and validating that breakout. There it is. So watch these through the day. Remember that you have a lot of economic events on the table. We're looking at trading view now, off of the futures into the equities. It won't let me look at the S&P 100 in this way, so we have to look at the S&P 500 and then modify our view a little bit. We want to keep it on the market cap, but we're going to change this to pre-market percent, and then we want to add a filter and knock it down to just around 100 names. Now, it's very hard to get it right at 100 names, right? Because you can't like just click there and type in 100. So we got to try to get close. 93 names is close enough for me. This is the top 100 names by market weight in the S&P, in the S&P 500. So we basically made our own S&P 100. It's generic, I know. I get it. I don't need the arguments from people. We're just trying to reduce the list a little bit, right? Now that we've done that, I changed the color scheme a little bit so it responds red and green sooner. There are still some gray areas, but for the most part, we seem to be risk on, slightly bullish, right? In a lot of sectors and a lot of industries across the board, it seems to be very positive this morning. So this is the S&P 500 knocked down to around 100 names. Now, thankfully, there is a Nasdaq 100, so we don't need to adjust it. We just bring it over to pre-market change percent, change the colors a little bit. I had someone ask about the colors. Notice that Microsoft is positive. It's up more than 0.25%, almost 0.5%. It's still gray. Well, if you adjust the color scheme a little bit, it will turn a different color sooner, right? So now there's Microsoft and it's green. Adobe is still gray. No, even Adobe's green, right? Cisco Systems is still gray at 0.05%. So as soon as it crosses from 05 to 06, it starts a little bit of color. Same thing on the negative side. 0.05 negative is still going to be gray. Look at Comcast, 0.04, it's gray. Look at EA. It's down a little more than that, but you get the point, right? We're just trying to add a little bit of color for an easier visual. It's looking pretty positive out there. Now, pretty positive is pretty vague, right? You're going to narrow it down a little bit more than that. Give me something more than pretty vague, right? So how about the S&P pre-market? Now this is S&P 100. How many names in the S&P 100 are up at least 0.5% this morning? Out of 100 names, 37 are up at least 0.5%. That's an actual real value. 37% of the S&P is up this morning, more than 0.5%. That's feeling pretty bullish. Let's do the same thing for the Nasdaq 100. 30 names. 30% of the Nasdaq is up at least 0.5% this morning. We can get more aggressive than that and ask, well, how many names in the pre-market are up at least 1%? 14% of the Nasdaq, including Tesla, PayPal, Nvidia, AMD, MU. All right, so we can see that there are some chip names, 3 different chip names. Those tie in nicely with Tesla. Then there's more than one auto name, right? Lucid Group, Tesla. So we're getting a little bit of a perspective on the industries or the sectors out there that we want to put our attention into, right? And that's the Nasdaq 100, and it doesn't have financials. So we always want to flip over to the S&P side and ask the same question because the S&P does have financials. And there's only 2 sectors that are going to really make a market move: the financials and or technology. One or the other is fine, but when you get both, oh yeah, then you're looking for one of those days. right? So here we are on the S&P 100, and the names that are standing out: General Motors, Ford, Tesla. Really? Again, cars, cars, cars. Then we've got Wells Fargo and PayPal. So two financials. Although technically, if you look into them, they're not really considered, quote, finance, right? Not both of those. PayPal is technology services, data processing services. They don't, it's fintech. So this is slightly bullish this morning. It's not looking too bad. We want to continue to monitor this through the morning to see what's moving the market today. Now, another way that I generally do that is to look at TrendSpider, because Thinkorswim doesn't do a really good job of showing you pre-market change percent. I have a modified Thinkorswim indicator that can kind of do the job, but it only kind of does the job, right? Why not go somewhere that actually does do the job rather than, trying to modify Thinkorswim to do that? So here's TrendSpider, uh, looking at the sectors that are up this morning. Emerging markets is something that I use for a global risk on perspective, and you can see that we are in a positive risk environment. So EEM is bullish. I tend to be a little more bullish. We got to really scroll down the list to see tech. So that needs to change. Technology needs to get off of the bench and get into the game. Finance is up more, and finance and energy were really tightly correlated last year. I want to look to see if that continues throughout the year. Marijuana is doing good this morning. We're going to go directly to the EVs themselves because we already saw that there was a lot of EV names and just straight up autos that were really positive this morning. A lot of names on that list. Tesla up more than 7% this morning. NIO 3%. Li Auto more than 2 3/4. So it's just very bullish. GM, Ford, right? We even got, some of those old legacy names. If you're looking for an opportunity, that would be the direction, right? You got some really good setups here. So the marijuana companies, the EV market, crypto was up last night. I haven't looked this morning. I don't know if crypto is still up this morning. I think I heard Bloomberg say that it is. These are my crypto names. They're not cryptos, right? They're companies that are in some way related to blockchain. And all of those are looking really good. There are a couple of negatives, right? But not very many. We already know across the board, all of these sectors are up. What I use this secondary list for are names that don't necessarily fit into the quote legacy sectors. We've seen some chip names up. We can come over and, take a look at the chip sector. Now, on a morning like this, we don't need our own personal scanners and watch lists, right? We can just lean on the sectors. But on a morning like this, everything is hot, right? Everything is bullish. So how are we supposed to narrow this down? I actually I've heard it said better than that. If our job is to narrow the market, think about it from a perspective of funneling, right? That we've got this massive aggregation of stock, just this whole collection, right? Just think about 600 names that have weekly options, and we need to narrow that list. We got to find a way to filter this down to where when we're done, there's just a few small names on the list. How the heck do we do that? So, depending on your trade style or depending on your account size, you may focus on things that are cheaper that kind of fit your account size, right? You may focus on looking for not just a day trade, but something that could sustain itself and turn into a swing trade. You could be focused specifically on individual sectors or individual names, things that have better options or options that have strikes that you're willing to trade, right? Because if you go in and look at something like Amazon, for an example, the strikes are really big. The cost of the options are expensive. You may decide that no matter how good Amazon looks, it just doesn't fit your cost and you wouldn't trade it, right? So you would be narrowing down, you would be funneling down all of those names into a manageable list of something to trade. When everything is bullish, like it is this morning, you really got to try to figure out, well, how am I going to do that? Well, what is it going to involve? The highest momentum, the strongest sector. What I like to do is start with something very basic since everything is up, right? Every one of those sectors were looking good. One thing you could do is start with something like the Dow 30. It's 30 names, they're all household names. They should be easily recognizable to most people. And then from this list, start looking for something like a red to green setup. Apple, for an example, closed in the lower portion of the day on Friday in a nice fade back. If I was looking for a bullish opportunity this morning, I may want to find something like this. It's inside day, red to green combined. That's a nice trade setup. We would be looking for a market that rallied off of these lows and is getting ready to open near these highs, right? For the red to green setup, one of my criteria is that we rally up at least as high as the previous day's open. Now, it's got a really long tail, so it's unlikely that we would rally enough to get above that. But if we can get outside of the entire day in the pre-market, I like that even more. But I want to see a rally up off of those lows to at least yesterday's open and open above yesterday's open. That's a good start. From there, then we'd be looking for an inside day breakout, not just a red to green, but a red to green connected to an inside day. We are inside of this controlling candle way back here. That's a really, really wide candle. So all of these are inside day behind that, but it has no validity because of how big it is. But this is a good example of a red to green. I was actually recording a video this morning on this red to green and inside day breakout. And the example that I was using was right here. It was Disney, right? So in the pre-market on this day, you could see kind of the same setup, only the tail is long on the bottom instead of on Apple where it was up at the top. But on this day, it closed here and in the pre-market rallied up and was getting ready to open the next day very close to the previous day's high. And then it had a really nice follow through on it. Red to green with an inside day breakout. There is very likely going to be quite a number of those this morning because if Apple closed red like that on Friday, how many other names closed red like that on Friday? And then, tie it together with something like this on American Express, where you've got this aggregate of price sitting all bundled up really tight. So you're looking for a red to green rallying up at least above the open of the previous day. Then, and we're going to be looking on an inside day breakout, and we can target something like the ADR or the ADR plus whatever, right? If the ADR is 2%, think about what ADR means, average daily range. Well, we're expecting above average price today, right? We're expecting like a wow day if you're looking for a bullish move. So you would measure the ADR plus something. That's a really nice red to green, right? Just like that. I will see you guys at the live stream at 9:15 in the large caps trade room. Look forward to seeing you all there.